Hi guys, today is November 2nd, 2020, and tomorrow is the presidential elections, and futures are pointing to higher open, as last week was an ugly week, and people think that we were oversold. But I don't know if we want to rush into stocks right now, because even though futures are higher significantly pre-market, but it could come down very quickly, because there's still a lot of uncertainty out there, especially considering presidential elections is tomorrow. And people are positioning themselves for different outcomes, but I think that regardless of the outcome, we will once the certainty once we have a certainty about the election and the election results especially, we will have a massive rally. So you really want to be in the market, but I would not buy at the open, because futures are pointing to a much higher open, and wait for the market to come down and then try to establish your positions. But you do want to be in the market for the massive rally once the presidential elections is over. Okay, so let's jump to SPY, ETF for S&P 500, and SPY is sitting in the make or break territory. I have this support line around 325. It's opening right now at 329, but as long as it stays above those lines, 325, 326, we're good. But if it breaks significantly below this, we may have more selling ahead, but hopefully we'll stay up. Okay, so let's jump to corporate news. And before we do that, if you want to see my trades on pretty much everyday basis, my portfolio, you can check out a Patreon link in the description of this video. Okay, so let's start with some oil stocks, because XOM, for example, and CVS, because in the previous presidential election, people said that traditional oil stocks will benefit from Trump presidency. That was not the case, because oils and fossil fuels in general were sold off during his presidency, even though he was trying to help them. But it's a very difficult industry to be in, and I would not be in those stocks, to tell you the truth. But if you put a gun at my head and tell me you have to choose one stock that you have to be in, I probably will choose Chevron, but in general, all these stocks are not in a good position to be in. Okay, but in general, XOM reported loss of 18 cents per share for the third quarter, and better than expected. Was expected 25 cents a share loss. Revenue came in above, and it's planning smaller capital expenditures next year, and compared to current year, and they pay pretty good dividend, more than 10% dividend. You would think it's great, but as you can see, the stock is just losing value hand over fist, and over 10% dividend is a red flag for me, because they may cut it anytime. So be careful with this one. And the other one is Chevron. Okay, so Chevron came in, actually posted 11 cents profit compared to expected loss of 27 cents. The revenue came in, though, below estimates. They're paying like 3.5% dividend, more sustainable, but in general, these stocks, like I said, are in trouble. Okay, so Honeywell. Okay. Honeywell is the earned $1.56, which is 7 cents above estimates. Revenue topped forecast, helped by cost cutting and strong demand for warehouse automatic equipment. And Honeywell actually is a great company to be in right now. They have some aerospace business that's struggling right now, but other parts of the company are firing on all cylinders. So I would be in Honeywell. Okay, HON. Under Armour. So Under Armour actually earned 26 cents per share, well above 3 cents estimate consensus. Revenue also above forecasts. Issued strong outlook on growing demand for home and outdoor workout apparel. And they reported on I think Thursday or Friday morning, and if the market didn't tank, the stock would go much higher. So I think it's a pretty good pickup in this area, for Under Armour, and it's looking pretty good to me. UA. NWL. Newell Brands, one of my favorite companies because this is a definitely candidate for a dividend portfolio stock. Okay, so this is a consumer products company and beat consensus estimates by 40 cents. The company said it expects flat to single digits core sales growth for the current quarter. So in general, if you want, like I said, if you want dividend stock, which pays like over 5% dividend and doesn't change much during the Wall Street sell-offs or rallies, then Newell Brands is for you. So I would definitely add it to my dividend paying portfolio. Okay, Apple. So Apple was one of the culprits why the stock market tanked, or actually Nasdaq tanked on Friday, because they actually reported earnings of 73 cents, which is 3 cents above estimates. Revenue came in above as well, but iPhone sales were light, as Apple delayed launching new iPhone 12 until October, and obviously the iPhone sales were light because of that. But all the other revenues, like services revenues and other revenues, were much higher, and I actually like the earnings, but I understand why the iPhone sales were light. People still reacted like a knee-jerk reaction to their earnings, and shares came down. But I think it's a pretty good buying opportunity to me on this sell-off. AAPL. Amazon. Okay, same thing was just like with Apple. Amazon actually reported pretty good earnings, even better than Apple reported. 1237 versus 741 expected, beat on top and bottom, but operational expenses were higher than expected. And that one comment about the operational expenses took the stock down significantly on Friday, as the whole tech was falling on Friday on those results, because people were just looking for the excuse to sell before all these uncertainties in presidential elections and huge run in those stocks. And Amazon and Apple were like victims of that basically thinking. So in general, Amazon to me is a great buy at around $3,000 or under $3,000 is a terrific buy to me. Okay, Facebook. Same thing. Great numbers from Facebook actually came in on Thursday night, and I didn't see anything that would warrant this huge sell-off in Facebook shares. Even though they said that there will be a lot of uncertainty coming into the next year, but obviously there is a lot of uncertainty coming into the next year because COVID is still around. But in general, great numbers from Facebook. 272 versus $1.91 expected. Revenue came in well above, and those boycotts by some of the brands didn't make even a dent into Facebook's earnings. So like I said with Apple and Amazon, Facebook is a terrific buy on this sell-off, and even if it goes lower, I would just start buying like in little chunks, and if it goes lower, buy a little bit more. Okay, Twitter. Actually, Twitter earnings I did not like, even though they tripled the consensus estimates by earning 19 cents per share. Revenue came in well above, but Twitter posted its slowest user growth since 2017, and I didn't like that fact that the user growth were slowing, the active users were slowing. I would stay away from Twitter at this point. Okay, Starbucks. Okay, Starbucks beat estimates by 20 cents, noting faster return by customers to its stores. I mean, what can you say? Starbucks is a very solid, a good company. It pays a nice dividend, and actually is a nice company to be in these turbulent times. Okay, ATVI. Some gaming companies, some reported and some are set to report. ATVI reported actually a beat and gave upbeat holiday forecast, but shares came down nevertheless. But I would be interested in ATVI at these levels, like close to $70, like mid 70s. It's a good pickup to me, and I also think that Zynga is gonna report. I like Zynga here, like around $9. And Take-Two Interactive. also set to report on, I believe on November 5th, and I think it's a pretty good pickup in this area. Okay, some banks had some news. So Bank of America said that nearly 10 billion of its consumer loan portfolio was in deferral program right now. So in general, people ask me, are banks going to be a good pickup if Biden wins or if Trump wins? It's tough to say, because if Biden wins, the rates are going to be will be higher rates, which will help banks, but I expect more regulation under Biden administration, so that will hurt banks. So it's kind of unusual to me. But if Trump wins, I'm not sure. If Trump wins, actually, I am more positive on banks if Trump wins, actually, because less regulation, and the vaccine will help the economy if we will have a vaccine, and banks will go higher. Okay, so Bank of America, JP Morgan. So basically, I am neutral to bullish on banks. Bank of America, JP Morgan actually said that they are raising its stake in its China Securities joint venture after buying 20% from one of its local partners. And actually, JPM was trading pretty low to me, like around $98. Under $100 is a great buy for JPM. I think it's going much higher than that. Okay, eventually. Lemonade. Okay, so Lemonade, lmnd, is an insurer, a direct-to-consumer insurance company. It's Piper Sandler began coverage with overweight rating, noting Lemonade technology forward competitive advantage. Okay, so I think shares came down. I mean, when it was trading like an $80, that was a difficult buy for me, but around $50, under $50, I think it's not bad to pick up here. Lemonade, okay, lmnd. MPC, Marathon Petroleum. It's a refiner, and beat adjusted estimates. It's lost $1 per share versus $1.70 expected loss. Revenue came in though below estimates, and I don't know if I want to be in a Marathon Petroleum at this point. I mean, if we have a vaccine that will help driving around, I mean, Marathon wants and other refiners wants people to drive, to be active, and because obviously because then they're using their products, the refineries. Waiting for people to pump up their cars. So, but in general, Valero Energy is my favorite in this space. VLO came down very low, and I think it's a great pickup here. But MPC, I'm not sure if I want to pick up MPC. Okay, EL, Estee Lauder. Okay, so Estee Lauder is a cosmetic maker. Earned $1.44, well above 90 cents estimates. Revenue also beat, announced 10% dividend increase. Estee Lauder, what can you say? I mean, firing on all cylinders. I actually expected them to be down a little bit because they sell a lot at airports, and as you know, airports are not that busy right now. But digital sales were really good, and actually the company is a good pickup in my opinion. This stock is a good pickup. And finally, I'll give you is NIO. Okay, so NIO stock rocketed this morning after October deliveries doubled to more than 5,000 cars, up more than 100% from a year ago, and it's a monthly delivery record. And in general, really good news from NIO. I mean, to me, a little bit too high. And I would wait it to come down to at least like low 30s. But in general, really good news from NIO, and I'm very bullish on NIO in general. But I just think that the stock price is a bit too high to get in. So I would wait a little bit to get into, if the market comes down, NIO will fall with it. So you could get a lower price. Okay, that's it, guys. Don't forget to subscribe to my channel, click the like button, and I'll see you Thursday.